Brandon, aka nope, we're gonna start that over. All right. All right. What is up, YouTube? This is your boy Brandon, aka Be Nice, and I am here with one of my good longtime friends, Sean Jackson. How you doing, Sean?
What's up? What's up, man? I'm doing well. How you doing?
I'm doing all right. So, to all you viewers out there, thank you guys for tuning in. This is the Facts No Printer podcast with your host, Be Nice. And today we have a pretty good podcast for you guys. I think that this is something that a lot of people have been really focusing on throughout the pandemic. We are going to be talking about finances and how to get yourself into a better position for the future. And Sean is the expert on this. We've had conversations about this numerous times throughout the past few months. Honestly, I feel like finances have kind of like strengthened our relationship a little bit more because like we're actually communicating on a daily basis now versus like we'll go a couple of months without speaking and then like pop back up and everything like that. But like I'm really excited about this topic. I know a lot of y'all have been waiting on a new video from me for a long time, and this is something that I felt like would be of value to you guys. And so without further ado, let's get into it. I got one question for you, Sean, or a couple questions for you, I should say. So, how is the married life going with you, with the kids and everything like that?
Yeah, man. So, as you know, well, your viewers probably don't know, but so I run my own business, Jackson Elite Training here in Holland, and then I was previously a coach, and then of course I have a family. So I mean,
For
my
sure.
wife makes my life a lot easier. She takes care of the kids while I'm working in the summer, because she has the summer off, so it's been going well. But there's times where I get home late, 8:39, and then I come
For
home
sure.
and I come in the door like today. My family was gone, and they were gone for 2 days or 3 days, and I hadn't seen them. And then I came home. So as I walk in the door, both my kids come running at me, and it's a great feeling.
For sure.
I love my family, but yeah, the married life is going. It's been up and down, but it's going well though.
Hey,
It's
I hear
going
you.
well.
I hear you, man. I feel like you're probably one of my first friends that I've actually attended a wedding for. So yeah, so like that within itself was like a beautiful experience. I was there the few years ago when you guys actually got married at our actual college that we all
No,
went to. So when I was there, I was getting the feels and whatnot. I can edit that out. I can edit that
it's
out.
a lot. It's a lot. You
Or I could leave it in there. It's not bad.
leave it in practice.
But I was actually there when you guys got everything situated, and it was a beautiful ceremony. I feel like weddings are one of those things that bring everybody together. Like a lot of people that you haven't seen in such a long time, and you guys get to come together and reminisce and talk about the good times that you guys had throughout periods of your life. And then I actually ran into you and Vanessa, Sean, not Sean, but Flurry and everybody else at Chris's wedding earlier too. And so I think that was kind of like the catalyst of bringing the brotherhood back together. And then Flurry was he was like a really driving factor in all of that because he was really wanting that sensual brotherhood energy. So we got to thank him for a lot of this too. But
Oh, yeah, no
not,
doubt.
yeah, it was a great experience. So I mean, so you're still working out, you're still a coach, you still coaching for the school and everything, or what are you guys thinking about the season as far as like this
Yeah.
whole pandemic and everything?
Oh, I mean, it's crazy. It's gonna be a crazy year.
For
But
sure.
I actually resigned from Hope College like 2 weeks ago, so I'm not
Oh,
gonna coach
gotcha.
football this year.
Gotcha.
But actually, our the football season actually just got canceled, I believe, yesterday. So there's not
Gotcha.
gonna be a football season for the MIAA. So it's gonna be an interesting year. I'm just focusing on my training business,
For sure.
and then focusing on my financial services business,
For sure.
and trying to get as many people educated as possible and help not only myself, my family, but my friends, my family, and just put 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 good energy and good information out into the world to help people be in a better spot. That's
For
my
sure,
goal.
for sure, and that's the whole goal of this actual podcast for today. So you said you have a financial services business. We've talked about this numerous times. Pretty much your big thing is that you want to help people be put into a situation where they can succeed long term and so forth, so that we can do this thing that we can build generational wealth for our families, and I feel like that is something that's like that people in the African American community we lack because we don't really have people to show us the way to get to those points that we need to get to. And like just talking with you and just understanding like what your goals are and what your purpose is for your financial services, I feel like that will be an asset to a lot of people who just really don't know where to start. I guess the easiest way to get the ball rolling is obviously we got to talk about budgeting. Budgeting is something that a lot of people don't know how to do. But what are your thoughts on budgeting for the most part?
Yeah, budgeting is the most basic thing that we all should do, but a
Mm-hmm.
lot of people don't do. I know for myself, I was bad at this starting at an early age.
For sure.
And it wasn't really until, I got a family that I really was like I really need to lock in and budget, and my wife has definitely been a catalyst at that cuz she's super organized, and we came up with a budget. And I mean, you have to as a family. You can go through the motions and continue to just live through life and be flying by the seat of your pants. And then you get in all this crazy credit card debt and student
Right.
loan debt, and the debt keeps adding up, right?
Right. For
And that's
sure.
being so.
Yeah.
Yeah. What about you? What's your
Yeah,
budgeting
so
philosophy?
so like you said, like credit card debt. So we both graduated from Hope. a lot of student loan money was paid to get that little piece of paper to say that we graduated from there. That I worked for a couple of years at a job that I really wasn't making any money at. So like my expenses were more than my income. So like I had to open up some credit cards and whatnot. And I had my physical therapy job, and then I was also doing Uber on the side, and I just really wasn't making any money. And so I was like, man, I need to do something. I wanted to go back to school. Like I feel like all of us were in school to like be physical therapists at some point. And then like it did yeah, and it just didn't work out. It didn't work out. So I think that was like the thing that like catapulted me into nursing, because like I always knew that that was something that I kind of wanted to do. And Ben Boer, he's a nurse, and so like he was one of those people that I reached out to constantly, but like, hey, how do you like this? How do you like this? How like what are the steps? What do I need to do? And he pretty much told me, he was like, yeah, man, there's so much money out here for male nurses. Like you guys are in high demand. We are in high demand. Like if you want to get a gig, you got it. So I ended up looking into schools. I got in, but school costs more money, so that's more financial debt. That's I literally racked up like 10K in credit card debt. And so when I did that, I was like, well, when I graduated, I knew I was going to make some money, but it was like I need to figure out a way to like offset all of this debt. So I sat down and I made a budget, because someone introduced me to Dave Ramsey, because I was looking for the quickest way to pay off my loans and everything. And I was hearing about the debt snowball, the avalanche effect, and all of that stuff. So I started looking into it more and more. And then Dave Ramsey's name just kept popping up. And so I was like, what is this plan? So he was like, you need to pay everything in cash. So I did a lot of stuff with cash accounts. So literally everything I spent, I stopped spending money on my credit cards. I did some balance transfers over so that I could have 0%, because I looked at my credit card statements and I was like, man, these statements are telling me that I'm paying hundreds of dollars in interest a month. and I'm sitting here paying $300 on. I'm paying like $100 on one card, $100 on another card, and like trying to bring down the debt, but it's not coming down. It's not moving. It wasn't moving, and so I consolidated all of that to one interest free credit card, and that's when my journey began. I like literally it was like 10K. I just like every single extra dollar that I had, I just threw at it until it got down. Once I paid that off, then next was my car. I was like, all right, so I owe a couple thousand on this car. Let me knock that out too. So then I knocked that out. So I paid my car off 2 years earlier. And now, because my car is fully paid off, that brought down my insurance. It brought down my like it just the entire premium. So I like it's wonderful. I went from paying like $200 for a premium on my car insurance to $99. So that's an extra $100 in my pocket, and then on top of that, I don't have any of the interest fees that I was being charged. And then so that's more free money in my pocket, and then I just learned how to budget. And so then a lot of my friends came to me. They started asking me like how to do different things and stuff like that, and I would like show them like, hey, this is the money that you got coming in. These are your expenses. You need to cut some expenses, and then go from there. But like I've had a very positive experience with budgeting, and I feel like a lot of people just don't know how to do that, and there's just like one thing. But like with the budget comes the ability, like once you get rid of some of your debt, comes the ability for you to be able to invest. Right. So, so free up money so that you could put money towards assets or some type of growth for your future. So that is primarily what I want to talk to you about, because this is your forte. So could you just like tell us like why do we need to invest? Like what's the importance of being an investor and whatnot?
Yeah. So, um, first I want to get into how I got into this. So basically, I got into this. I got in a car accident actually.
Okay.
And when I got in that car accident, I came to a realization. I was like, man, I don't have, I barely have any money saved up. I don't have any much investments. I didn't have life insurance at the time, and I'm like, if something would have happened to me, I would have left with not much, and a lot of debt and not much money. And that was a spot I know I didn't want to be in, and that was a spot I know I wouldn't want to leave my family in. And I love my family, and everyone I know loves their family, and no one wants to leave their family like that, right?
For sure.
So you should invest because I want to have generational wealth, right? We want to be able to live a life where when I get 40, I can actually, or 50, or whatever your retirement age is, you can actually retire and not
Mm-hmm.
have to work just to be able to pay your bills, for one.
Mm-hmm.
And then two, um like you want to be able to leave your kids, your grandkids, whoever it is, you want to be able to leave them with something that they can have a step up in life and not have to worry about a college education, or maybe they want to start a business or whatever they want to do. If you invest now and you build that wealth, you can pass that on, and then that's going to set your family up for success. And that's one thing I know in our community that is not done often. And I urge, if anything you take away from this podcast, the number one thing you should do, which is the one thing, if you look at a financial house, besides paying off your debt, you need to have life insurance to ensure that your family will have something for not only to bury you when you pass away, but to have something to pass on to the next generation. And that's the cheapest thing you can do, to
Yeah, for
ensure
sure.
you have
For sure.
cash.
And there are two different types of life insurance. There is whole life and then there's term life. So which one is the one that you would push people to get?
Well, this is a great topic, but
Right.
in a nutshell, think about so our goal is to be able to invest money and build our wealth and be able to pass it on, right?
Right.
So you got term insurance and you got whole life insurance. Whole life insurance basically is where you get a policy and you get, say it's 10,000 and you're paying $100 a month. You pay that $100 a month. You'll always have that $10,000 policy face value, and then you'll be building a little bit of cash in your account. a cash value. But what they don't tell you, there's
Hmm.
always something they don't tell you. They don't tell you that you don't have any money in that savings account that you're supposed to be building for the first couple years. So if something were to happen, you would only get that face amount, the cash value.
Right.
They don't tell you that when you do build that money, if you wanted to borrow from your own money, you got to pay interest on your own money to borrow it.
Yeah,
And
that's wild.
the, the other killer is they don't tell you that you're only making 3 to 4% likely or something less on the money that you're building in that savings account. So I mean, be the judge.
Yeah,
And
that
but this was I mean, a lot of people still have this insurance, and I will say that's better than not having anything at all, because
true,
at least you'll
true.
have some money to bury your spouse or whoever passes away. But most of the time, you're not gonna have much money left over, right?
Hmm.
Because you policy and it's only 10, 20 grand. That's not much.
Right.
And if and then you have term. A lot of people think term is bad because you have it for 20, 30 years, but then if you renew it, most of the time you have to be paying a higher premium. But what people don't understand is you should be building wealth so you can become self-insured. That's where we all want to be. Like, if you don't have to have as much, think about car insurance. We have car insurance, health insurance, we have cell phone insurance, we have all these different types of insurances. Our life is the most important thing that we can insure,
For
right?
sure. For sure.
And if you have car insurance, once you own your car, you're most likely gonna you're gonna you don't need full coverage, or you not
Exactly.
want to have that full coverage. You know what
Exactly.
I mean? So you're gonna money just by changing the type of insurance you have, because you own
Exactly.
that car. If someone were to go buy a different one. So
Exactly.
with us, term insurance, instead of having a $15,000 policy and paying $100 a month, you go get a term policy and pay $25 a month, or 50. I'll say 25. That's what it would be for most healthy people, or even not that healthy. You're gonna pay less money for a term policy. Say you got it for 20 or 30 years, and then you take that difference of $50 or $75 and go invest that, right? I mean, buy term invest the difference has been around, but there's so many people out there that still have life, whole life. Like, I had to fight with my grandma and my mom to change their policy because they thought it was a whole life policy, and I'm like,
Yeah.
no, it's not.
Yeah.
But that's the only thing that was out. And at the time, then
Mhm.
like I said, it was better than not having anything at all.
Right.
But that's not the best thing that you can, right? Like when AOL first came out, everybody was great. Like, that was the best thing there was, right?
Hmm.
That's all we had. But if we had AOL and now we got 4G, 5G going way faster and way more capability, why on earth would you still be using AOL dial-up, right?
Exactly. Exactly.
Doesn't make sense,
It
bro.
doesn't
You
make it make sense, bro. Make it.
bro. And
Hey,
then
that was a great
yeah,
one. You say AOL was the best thing since sliced bread. I remember
hey, bro,
I remember that Net Zero, like not being able to use the telephone and all that good stuff.
yeah, bro. Like, you got people out here
Yeah,
still with
no, for
AOL.
sure. For sure. And that's like that whole life insurance thing, that's like a highly debated thing for a lot of people too. Because like a lot of the boomers, those are the people that tend to hold on to their whole life insurances because that was the only type of policy
They have
offered during that time, because that was at that time that was the best thing. But like I've done a lot of reading into term life, and I tried to tell a lot of my friends who are trying to become who are more family oriented and who are looking more towards the future, around our age group and everything like that. I'm like, hey, like, all I've heard is good things about term life, and essentially term life, that is your money from what I understand, correct?
that is your money for that period of time. So, like, most traditional policies, you can get a 20-year policy, literally 18, 25 bucks a month, which
Mm-hmm.
is but you got this pile of cash, $100,000, $200,000. Like, for myself, I have I mean, in total I have like $600,000 worth of life insurance.
Mm-hmm.
So I'm worth more dead than I am alive right now.
Yeah,
But
true. Hey,
but I'm gonna get there.
for
In
sure.
20 years, that 600K is gonna be nothing, because I
Right.
know I'll be worth more than that. But in
For
that
sure.
time frame, can buy 600K and pay $100 a month, why would I not do that? Versus if I went and got a whole life policy for, I mean, I know for $100,000 policy, it's probably 200, 250, and I'm healthy,
Right.
that
Right.
doesn't even make sense. And I'll invest that $150 that I would save and build that over time. I'm gonna be way better off, you know.
For sure. And
So
and even if something were to happen to you, you still have coverage, and that money is going to go to your family so that your family can pay off the mortgage, pay off the cars if your cars aren't paid for,
and
and XYZ, whatever miscellaneous things that they need to take care of, they're able to take care of that with that money.
and the yeah, like GoFundMe thing pages for funeral, like that should not be a thing. Everybody should have
Hmm.
life insurance to protect their life. Our life is the most important thing we can protect for our families. We got to be
For
able to
sure.
have money for burial, right? We got to be able to have money to pay off the debt that you might have, and then most importantly, you want to have money for your family to live, for a month, not a month, a couple years to be
Hmm.
able to replace what you brought to the table. If half your
For sure.
income, if you're married, and half your gone, that's a big pile of change that you don't have coming in anymore.
Yeah,
That
that's
so
true.
now,
And that's true.
and then now you're dealing with not only the devastation of a loss of a loved one, but you dealing with the financial. Nobody like that shouldn't be a thing. So
Hmm.
everybody needs to get insurance. In
Yeah,
short,
for sure, for sure. No, I'm definitely on team term life, and I'm definitely very understanding of it. Just because it can make that little thing that people can do can make such a big difference in the lives of the people that you care about the most going forward.
yeah,
So I mean I feel like it's a win-win situation. You're covered, and you got money that you can put towards other things that you may necessarily have to, like whether it's debt or just like regular household bills and stuff like that. Free up a little bit of cash, but you got in the back of your mind, that if something were to happen to you, your people straight, your people
yeah,
straight.
you put taken care of.
Yeah.
Exactly, and that's what we
So
want. That's how you automatically you're like you automatically you built generational wealth by purchasing that pile of cash. And my last thing I want to say about it is make sure like get it while you're young, whether you're single, whether you're married, whatever you are, get it while young because your premium is going to be super cheap. And go get a 20 or 30-year policy, lock it in, pay your 30, $40 a month, make sure you're set, and then build wealth and take care of the rest.
for sure, and this is outside of whatever life insurance policy that your employer would offer.
Yes, because think about how often people change jobs. The average
Hmm.
person changes jobs like I think it was like every 3.5 years or something like that.
Hmm.
You don't ever know when something like a pandemic might come,
Right.
and now you get laid off and now you don't have that work insurance, right?
Exactly, exactly, and that's something that people need to be mindful of too, because we really don't know when this situation will be over either. But we can only hope that by the end of 2020, we'll have some type of preliminary vaccine or something, and so that by 2021 we can get things going back in the right direction. So
Right, right.
that's like the big thing. So going off of that, I'm looking at this great little document that you sent me. I'm seeing what is the rule of 72? Is that something that you wanted to jump into this week, or is there something that you want to? Is there a
Yeah,
different?
yeah, we can.
Okay.
Yeah, no,
Uh,
I want to talk about it briefly.
okay. For
So
sure.
yeah, everybody needs to know what the rule of 72 is. That is basically it's going to be working for you or it's going to be working against you. So if you have debt, the rule of 72 is going to be working against you.
Okay.
If you don't have debt and you're investing, you can make the rule of 72 work for you. And basically the rule of 72 is um like if I have um money and it's basically telling you how many periods your money will double. So like let's say I have $10,000
Hmm.
and I go put it in the bank to invest it. If we use the rule of 72, that money is gonna double every 72 divided by 10 is going to be every 7.2 years that
Mm-hmm.
money will double. So it'll turn into 20,000 every 7.2 years.
Right.
So that's basically what the rule of 72 is. And again, if you have $10,000 worth of debt, or $100,000 worth of debt, student loan debt, or things of that nature, that's going to be working in reverse. So you're going to be
Right.
earning more or having to pay more interest as you continue to hold that debt. Every 7.5 years, you got 100,000. It ain't looking good,
Gotcha.
you know.
Gotcha. So what I'm understanding is this is a rule that people should think about jumping into investments as early as possible. So whether like you have a newborn kid and you're setting up an account for them to go to college or whatever with, or if you're a 20-some-year-old that just got out of college and you're starting a career, we want you to start investing your money early so that it could double in
Yeah,
time.
yeah,
Gotcha.
and I
Okay.
gotta explain that better. So like basic like the amount of interest that you have or working for you or against you. So like if you had a 10% interest rate or you earn 10% on your money, if you divide 72 divided by 10, that's how you would get your doubling period. So like if I had that 10K and I was earning a 10% interest rate, every 7.2 years it would double. Or if I
Right.
had um that's what the rule of 72 states. So
So
like if you
so
had that
that's
10%
compound. That's compound interest, though, right? That essentially that's what it
yeah,
is. It's compound interest for just in, for
compound.
lack a lack of a better word. The rule of 72 is compound interest. Gotcha. Okay.
Yes.
All right. So I just wanted to make sure because I have heard of this before. I watched the little webinar that you had sent, and when the lady was explaining it to me, I was like, oh, that makes sense. So if you take a 20-year-old and you take a 30-year-old and you hand them both 10K, the 20-year-old for their lifespan, that 10K that they had that's going to the rule of 72, they would net more money in the end than the person who started at 30. So
Right.
essentially, we want people to start investing early, as early as possible, with
Exactly.
their money, so their money could work for them instead of against them, like you said.
Right.
So we
Quicker you
we
can get your the better.
Yeah, exactly. So a thing that I've been obsessed with these past couple of months, and literally we talk about it every day. My girlfriend is probably gonna kill me because this is literally all I talk about. I talk about it to everybody, everybody at work, all my friends. I'm like trying to throw that referral code, that Robinhood referral code to everybody.
Bro, everybody listen, before we even move on, everybody needs to download Robinhood and Webull and get yourself a free stock
A
and then
free
share with
stock.
your family members.
For sure.
Free stock.
There will be links down below in the description for both of our Robinhood accounts. He has a Webull account, so I would link his Webull down there as well. But yeah, so this is yeah, just go to the description, look down, whoever Robinhood thing you wanna check out, just check it out. All right, so we've both been into the stock market like crazy for these last couple of months. I feel like this is something that everybody has been doing since the pandemic. A lot of people took their little Trump checks and they threw it into the stock market, thinking that they were going to become millionaires overnight. And some people have
Right.
have had success with it, but like the market giveth and the market taketh, and so this is something. So this is something that we both have experienced. I know I've had a couple of L's, took a couple of L's to get the W, but we've been like, as we're filling out the market, trying to figure out how this thing works. We've both, I would say, we both like kind of refined the plan that we want to go with. Instead of trying to jump into numerous different things, we just like start small and then build up, just like getting familiar with stuff. So one way to make that rule of 72 work in your favor is to obviously start investing, to start putting money into accounts. I know that you have a stance on work retirement accounts and everything like that, but this is something that I feel like for the very basic person, we can try to learn how to manage our own money and the benefits of learning to manage our own money, but also the risk of learning to manage your own money. So I'm looking here. I'm on what is the new investing strategy that you're excited about?
Yeah, so basically, like, so when people work, if like my wife's a teacher, she has a 401k and I forget what the other one is, but basically you get the investment account, and you got you're putting away your money into that account. You might be getting money from your employer, put it away into that account, but either way, you're getting money put in that account, and they take that money, the investment companies, the and put that money into ETFs. So like
Mm-hmm.
the biggest and most common ETF that there is the SPY, the S&P 500. And over time that SPY is gonna keep moving up because that's where people put their money. That's where the 401k they put them in ETFs, and that ETF always builds value over time. It goes down, but it over time it's steadily moving up and up and up. Whether it's $30, $40, $50 for the year, $60, whatever it is, it's slowly gonna be moving up. And yes, it comes down, but best believe it's coming back up, and gonna keep on that incline. So on average, like a good return is like 9% for a year. So if you had $10,000 and you got that 9% return for the year, let's do the math on that. You would make um you would make $900. So I mean, $900 for the year. That's almost. Let's. I mean, that's that is per month. That's $75 a month. That's for free money.
Yeah,
That's great.
that's not bad.
That's doing anything. Just let your money work for you, which is all what we want to do. That's great. But let's say you learn how to read a simple chart and you traded just that same ETF
Mm-hmm.
SPY, which
Mm-hmm.
is my strategy I'm gonna do.
Mm-hmm.
And you did that same ETF and you made your own 9% a day or 3 days a week
Right.
or once a week, whatever you want to do, whatever you feel like. But it would be way better off if you made 9% once a month versus 9% once a year, right?
Right.
So my goal is to take my money and use that strategy to invest in SPY, make my 9%. My goal is to make $200. So each time that I do that, so if I made $200 or more, right?
Right.
Each 3 times a week, Monday, Wednesday, Friday, trading stock options. Um, I mean, I'm
That's
gonna
a
make that. I
right. That's a
mean,
couple
and
of
a lot of
grand. That's a couple
a
grand
couple.
a week, right?
Yeah, so I do my numbers right. I'm banking on winning 2 out of 3, which is more than reasonable.
Mm-hmm.
If I win 2 out of 3 trades, I'm always risking $200. Now I'm risking 1 to 1. So if I lose 200, I'm planning on winning 200 the next time. So I'd break even. But if I win my next trade, I'm still up $200,
For
right?
sure. For
So
sure.
accounts, and I'm planning on doing that on each account. And if I'm successful, which I have, I'm my TD Ameritrade account. Um, if I do that in each account, I'm going to be making $1,200 a week. And over the course of a year, that adds up. And like I'm not. Don't call me an expert.
For
I've
sure.
learned and like, but you don't need to be an expert to make money in the market. You just need to learn how to read the charts, stick to a stock that you know how moves, and ETFs move up and down in both directions. You can make money when it goes up if you bet and get a call. You can make money when it goes down if you bet and get a put. Versus if you're in a 401k or whatever, stock only can go up. If it goes
Right.
down, you're losing money. If you're
Right.
trading stock options, and you say it's going down, you can make money when it's going down too. So
Right.
you just gotta be aware.
Yeah.
And if you can manage your own money or pay someone to manage it for you, you'll be good to go. And once we didn't really talk about the four quadrants, but you can be an employee, you can be self-employed, you can be an investor, you can own a system, um, and at the end of the day, we all want to get to that investor category and get money, making money for us. That's the best thing
Right.
versus trading time for money, right?
Right. 100%.
Like so yeah. And I just got to share with everybody, like my one claim to fame with trading was I made that I
Hold
a
on
good
one.
call
Hold on
on
one.
a Tesla.
1 second. You're kind of coming in and out. So I apologize for the choppiness of the internet, everybody. But you know how technology is. Technology doesn't always work in your favor at all times. But go ahead. Say it again.
Can you hear me now?
Yeah.
All right. So yeah, I said I wanted to make my one claim to fame and show like people what's possible. So like this is obviously not every day, but like I bet a call on Tesla, and I spent $3,000 in on a Friday, and then that Monday, I woke up and saw it went up, which I strongly believe that it was going to go up, and I made I returned $15,000, so that was plus like almost so $12,000 I made in the course of, I mean, basically a day, because the market is not open on Saturday and Sunday. And that's, again, that's not every day, but like
Not
that's
at all.
just what's possible my eyes. Like there's people that are doing that probably consistently making 12,000, 10,000, 100,000. Like the market is the best, like one of the best ways you can make money, money for you,
Yeah, man.
and if you, you
The more money you have, the more money you can make, but also the riskier things can get for you as well. I
right,
I didn't have $3,000 to throw into the stock market. Uh,
right, a lot of people don't.
right,
People
you
don't.
know, a lot of people
But
don't, but you can start small and build up to that.
mhm,
And there are multiple different strategies that you can use to get to your goals. You can scalp, you can swing. You could do a lot of stuff. We're limited with the day trading unless you got 25K. But there are numerous different ways that you can get a piece of the pot that the big guys on Wall Street don't want everyone else to have. They want to take your money. They want to take your money, but no one wants to teach you how to make this money because everybody wants to keep it to themselves. But all in
exactly.
all, if you learn something and you learn how to do it and you get good at it, there's nothing stopping you from being able to reach financial independence, financial peace, and to be able to retire early. Or fire
Mhm.
financial independence, retire early, and to be able to go on vacations whenever you want to go, not rely on someone. Oh, I got to put in PTO hours so I can go on this vacation. There's like a lot of different things that people can do that can help put them in a way better situation than the one that they're in right now. And all you got to do is just go out there and get the information, read books, watch YouTube videos, learn how to read charts. Candlesticks are amazing. Look at trends, learn how to read trends, learn resistance, learn support. And once you do that, that will make you an instantly a better trader. And then obviously watching the news, listening to the news and stuff like that too, it'll put you in a position to where you can be great. And I just want to talk about this one because I think that this is kind of funny. I think we both blew up our accounts on the same day because of the day trading rule, right?
Oh, yeah, yeah, yep.
Yeah.
So that day trading rule, if you don't watch yourself, if you trade too much, you're gonna fall right into the hands of what Wall Street wants you to do. You get in bad trades and you can't close them out,
Mm-hmm.
and then you lose money, right? But if you stick to your three trades, if you get three profitable trades a week, what's the point of doing another two trades?
For
Take
sure.
your take your money, and there's always gonna be more money out there. That's one
Exactly.
thing I have. I missed out on
Exactly.
2,300, but I gotta accept that.
Yep.
I gotta accept the $280 profit and be
Yep.
happy,
Green is
right? Like
green.
that's
Green is green. No one ever went broke taking profit.
Oh, what like profit is profit, you know. And
exactly.
like
But you also can't get greedy. You can't get greedy out here either. And I got greedy, and I ended up losing a significant amount because I got greedy. So literally, I was so mad because so AMD this past couple of weeks have like just been trending for earnings weeks, and a lot of people will be like, don't jump into it. It's earnings week. It's too volatile. Don't do it. And so I think one morning, like I made a good trade and I like profited like $500 some, right? So I have a small account. My account went up to about $1,600 that day, right? I was so geeked. I was like, I'm up there. And then like literally like 10 minutes after it was at its high, it started going down, like, which I should have sold because I got greedy thinking that it was going to run back up. So silly me thinking it's gonna level back out and go back up by the end of the day. Lo and behold, it didn't. So that put me I lost all the money that I got, and I got out so late. So like I profited like $40 when I could have profited like a couple hundred, right? So I was sick to my stomach because I let that happen. And then so like because I wanted to make that money back, I was like, all right, let me get into another trade. Let me find another trade that I can get into. And so my dumb self jumped into another trade, and that trade cost me another couple $100 because I was just so anxious, and I was just like, I was ready. I had that fear of missing out. I was like, I gotta do something. And so I was like, all right, I got about $500 left in my account. What can I do with this, right? So I bet the whole 500 on SPY. I was like, all right, let's do it. So I put the whole 500 on SPY, and I was up $200 some, right? And I was like, I just want this to go up like 2 more cents, and I'm gonna take it. And once it go up 2 more cents, I'm jumping out. Let me tell you, it didn't go up 2 more cents. It crashed so hard. I went from plus 200 to negative 500, bro. I was sick. And so what I did, so I was hurt. I was like, it's gotta go back up. It's gotta go back up, right? It's gotta go back up. And I had 3 day trades left. Like that's the whole thing. Like I just didn't want to accept the fact that I was taking the L like that because I was up. I was up so much. I was like, yes, this is great. I'm up 200, but I just wanted to go to 210. Once it gets to 210, I'm cashing out. And nope. I didn't set a stop loss. I let it keep dwindling down, and pretty much that was my account. So in my account, all I had left was like a call for Walmart. I sold that call, and I had like $240 left in my account, right? So then I was like, I was defeated at that point. And then that comes last, what was this the other day? I bought that put, that 323 SPY put because SPY jumped up to 325. And I bought that. I was like, man, there's no way it's going to go down. It's going to go down. I bought that put just off a whim. I was like, this got to work. And lo and behold, I woke up to a payday. And that just rejuvenated my entire account. Like that one trade, I lost like all my money the week before, and that one trade put me right back into a position to be viable in the market again. And then that same exact day, I jumped right back in at the low where I sold my shares at open, and then it went up, and then that was another 60 plus return that I got. So I got about $100 some off of that, which if I would have left it in there, I would have made a little bit more, but I didn't want to get greedy. I had learned my lesson before. So take profits while you can. And then if you have enough to have runners, let the runners stay and continue to make you free money, because those are free plays. But
Right.
yeah, but yeah, man. Like I said, the market giveth and the market taketh. Don't get greedy. Learn your lesson, and that's pretty much it. It was strange, man. I was down. I was emotional. I was hurt. But like now we got our plan going. And and the cool thing about this is something that I've been looking into. Um, a lot of the people, even Jeff Bezos' wife, she went on record and said this: the people who are successful, who are billionaires and millionaires and all that stuff, they don't do it by themselves. You know, they're the people who come in with a team approach. Those are the people that have other people in their corner that's willing to help them and that's willing to go the path with them and to go at bat with them. And I feel like two minds are greater than one, and that's you and me going together into this. And I have a couple of my other friends that I have going with me too. I created like a little group chat with them, just so that like, hey, this is what I'm looking at. Just like I talk to you, I'm like, hey, this is what I'm looking at. This is what I'm thinking I'm gonna do. If you guys are up for the risk, this is what you guys should jump into. And I feel like having that type of mentality to help everybody win, that is the type of mentality that will get you far. Because can't nobody do this alone. And I'm so grateful. I'm so grateful for the knowledge that you're willing to share with me, and that you're willing to share with everyone that's going to watch this podcast as well. I wanted to get into the point that you did make a ebook yesterday.
Yeah.
Yeah, so you have an ebook, so that not only are you helping me and you're helping the people around you, but you can actually help the people that are watching this too. So you have an ebook. It's not for free, but it's what, $10. That what's that? That's pretty much a Whopper meal at Burger King, essentially. So anybody can afford it. You know what I'm saying? Or dinner for two or something like that at McDonald's. But
Yeah. Right.
but it's game and it's hip, and I feel like it's something that people could really benefit from. So I'm gonna give you this situation. I'm gonna give you this time right now to plug your book real quick, and we'll go from there. And then I'll put like contact information, in email or something like that, where they can go to try to get that book as well.
Yeah.
So yeah, plug
So
it.
yeah, basically the book just has a brief background about myself and my trading strategy. But in a nutshell, like it really just gives you the basics of why you need to start investing, how to do it, how to get started for free, how to help family and friends get started for free. And then also it gives you a strategy that you can use. You don't need to be this, like I said, you don't need to be a guru. You can watch the ETF that banks that you're probably investing in already, you know, and take $100, start off, and it gives you a plan based on what you're willing to risk, how much you can win, and literally the strategy can help you. You can literally be in and out of the market in less than an hour. Usually, honestly, when you get in, if you get in at the low, you can be in and out of the market in less than 10 minutes. And if you can make $20, $100 or more in 20 minutes, I mean, I know I want to do that. If I can wake up and make money before I even go to my day job, and maybe this money that I'm making can replace my day job, and I can do things with my family, and I can do things like volunteer or whatever, or do whatever I want, versus going to trade and slave my time away for somebody else's dream. I can build my own dream,
For sure.
and start my own business or whatever it is. And that's my goal, is to just empower people, get people learning how to invest, and just show people what's possible if they're willing to learn a new skill, and apply it. And then my hope is that they'll apply it and then help other people do the same, because that's what's going to help our community, the Black community. That's what's going to help the world as a whole, is if we can all collectively each one teach one. If we have that mentality, there's no limits on how good this world can be, how much wealth can be built, how much people we can feed, how much people we can help. So like, to get the book, all you have to do is, I'm finishing up my website, my financial services website. I'm gonna put it on there, but to get a copy of the book, you can simply email me, Sean at jacksonleetraining.com. and then we'll put the contact info, like you said, in the links. But I encourage everybody to start investing. Like, you can take $75. Like the plan that I have laid out, you can literally start with $75 and make $20 or more. Um, in, like I said, an hour or less. If you're willing to risk $75 to get $20, if you can do that 3 times a week, and then you start doing $40, then you start doing $80,
Yep.
you're gonna be on your way building some substantial wealth.
Yep.
And that can change your life and your family's legacy. So
Yeah, for sure.
yeah.
Yeah, man. So I think that we're gonna wrap it up there. So essentially, like, let's just do a synopsis of the entire podcast. So essentially, we want everybody to put themselves in a better financial position. So number one, I see you have here, get your house's finances in order. Make sure you got the proper life insurance for your situation. Pay off your debt if you have any. Set up emergency accounts, investment accounts, and all that good stuff. That's the number one thing that you could do. Number two is you can get a free financial plan done. Determine what your financial independence number based on what you want to do when you actually retire. Right, and what age you want to retire. And then three, if you're inclined to do so like you have done, you can start a business. Sell a product, make a product, sell a service, do something that can help make you to help put you in a better situation that you need to be put into. And overall, ultimately, none of this is going to happen overnight. That's one thing that we really need to stress, that nothing happens overnight. But if you take the steps that you need to take to try to make yourself a better person, and to learn and to be willing to take some losses, take some risk, the rewards will be plentiful. And then you'll be able to teach that, to spread that on to other people, and to be able to help other people grow just as you grow. So Sean, I'd like to thank you for coming on to the podcast this week. I felt like this was one that was much needed for the people. A very, very good conversation. I was so happy to have it with you. I'm just excited. I'm excited. I'm excited for the future. I'm excited for the things that we got planned going forward. And then I'm also excited for your small businesses that you got going on. Your entrepreneur spirit is rubbing off on me, and I'm proud to be able to call you one of my friends. So it's not even a friend. You're like a brother to me. So I'm just blessed. I'm blessed, and anyone watching this, they're blessed to be able to get your financial knowledge as well. So for all you guys who have stayed true to the channel, even though I'm very inconsistent with the posting and whatnot, thank you guys for watching this video. Thank you to the new people who are watching this video. All the links that we have talked about in this video will be in the description below. You guys will be able to reach out personally to Sean to set up financial training, financial tutoring, everything for his financial services. I am not a professional, but he is trained for certain things for your needs. So if you guys need retirement, investment, life insurance information, and all that stuff, he is your guy. So you guys can talk to him. But that is all that we got for this podcast. Thank you guys so much for tuning in. And as always, have a good one. Thank you.
Thank you, guys. Have a good one.
All right.